Hey everybody, Mark Yegge, wealth architect and lifestyle investor, and I'm excited about you, just like I'm excited about my other investors who are 7- and 8-figure investors that get offense and defense by playing with a program called the Cash Flow Machine. And I'm going to talk a little bit about it in here, but really, I'm going to give you what I see are the best 3 stocks that you can invest in, the best covered call stocks for 2022. And if you stick around to the end, I'll give you a bonus one. This is a lot of fun too. Without further delay, let me just launch right into what we're talking about here. So the best covered call stocks for 2022 are basically based on our system. And I'm going to give you an inside peek at our system. It's called the Cash Flow Machine. I'll probably mention it a couple of times. You might have even heard me mention the Cash Flow Machine before, but it's called that because you put money in and then machine just generates that cash flow year after year, week after week, month after month. So the inside peek of our system is that you have to buy the right stock in the right market at the right spot on the chart, and then we do what's called squeezing out the juice or collecting the rent on the stock. And it's an exciting part of the program. We're not going to talk about all the different aspects of the program. We're just going to talk about the best covered call stocks for 2022 because Cash Flow Machine is revolving around a whole system of doing covered calls. So we're going to talk about the right stock. We're not even going to get into whether it's the right market or not or the right spot on the chart. We're going to make a couple of assumptions that it is. Actually, as I record this today, it's not, but that's not the point. The point is we're looking a bit down the road and I'll show you how we actually squeeze the juice out of these stocks. Okay. So let's just start with what do we look for in a stock? How do you find the right stock? Well, besides all the fundamental analysis that we do, which is a good company? Does it have good earnings, good growth, sales, all those kinds of things, which we do before we screen any company, before we invest in anything. We look at the chart also, and we look and see if you could squint and see if this is right. Does the chart go from the lower left to the upper right? Here's a chart on Tesla. You can see very clearly that it goes from lower left to upper right, right? You see that? And that's what we're looking for. You want to be able to identify it really easily. Here's another one. This is Apple. Look at that. Lower left, this is textbook. Lower left to upper right. Now, this is a monthly chart. It takes out all the swings and the noise. So, but it's totally lower left and upper right. Here's the Nvidia, right? Lower left to upper right. A little bit more volatile than Apple, for example, but still, it's making that trend. Now, there's some stuff going on at the end of that trend we'll probably talk about in a bit. Here's what you don't want. Here's a daily chart on Meta, which is Facebook. And this, you don't want this. This is a stock that was almost at 400 and now it's at 200. It's down about 40%. It's hard to make any money at all when you're down 40%. Even if you're collecting time premium and you're collecting call premium, it's still hard to make money in the market when your stock is going down 40%. So you want to avoid those if you possibly can. Look at this, Upstart, beautiful stock. Went from 107 on this chart to 401. Went 400%. Problem is it also came down incredibly from 400 down to under 100. So this is not a good cash flow machine stock. We don't want to be doing this. Remember, it's lower left to upper right that we want. So let's look a little bit more granular at Tesla. This is a weekly, and you can see that over the last couple of years, it's still lower left to upper right, even though now we're zooming in a bit. All right. So I'm going to go a little bit fast. You may have to rewind. And by the way, if you like what we're talking about here, please hit the subscribe button if you're watching this on YouTube. I have a podcast called the Wealth Architect Podcast. Please go follow that because we put out stuff like this quite a bit. And if you want to hit the like button and notification button, you'll get to find out immediately when I put out my next video. But I want to show you, and I'm going to go a little bit fast on how we do this. I'll slow down on the first one, and then I'll speed up on the next two, okay? So here is an options chain on Tesla. So an option chain basically pulls up all the options that are the puts and the calls. The puts are for when you think a stock is going to go down, and the calls are when you think it's going to go up. So I'm not confusing you. I've removed the puts from this equation, but there's still a lot of information on the screen. All you need to do is focus on the 3 rectangles, and the stock right now is at about $1,022, right? So we're going to go pretty close to the money. At the money is 1025. right? Just a little bit, tiny bit out of the money. And the 1,025 strike price and are selling for the bid of 80.20. So you would be getting, when you sell something, you get the money, you get 80.20 for it. Now, these are options that expire in 40 days. So I want you to remember those three numbers. 40 days, you get $80.20. That's what you're going to sell it for. And then these are the 1,025 strike prices that expire in May. Okay, so out 40 days. Got it? All right, now let's take a look at the math. Now, if you're not a math person, I'm going to try to walk through it, but stick with me. It's pretty cool, and I make it simple. So here's the calculation on Tesla. First of all, you buy your base at $1,022 a share. You just like go out and buy 100 shares of Tesla. So 1,022, so you can be spending about $100,000. All right, and then you sell a contract for 80.20. So you get 100 times that, so you get $8,020, but it's you sell the 1,025 calls for 80.20. Those are the numbers that I just showed you, right? There, right? You got those numbers? Okay. So now we go and figure out what our basis is. How much do we have invested in this particular investment? So we spent $1,022 per share. I'm just going to make it per share. You can multiply it by 100 when we're done. And then we got back into our wallet $80.20 because we sell the calls. We don't buy them. We're covered calls writers and sellers here, right? So we have $941 invested. We've lowered our price down to $941.80. We've given up the upside, but we've lowered our price down to $941.80. So we got a nice cushion going down. So we've created a margin of safety just like that. And we've also created some income. Here's how the return on investment calculation works. You take the $80.20 that you got, and then you divide it by your basis. Now, we just decided your basis was $941.80, right? We just calculated that. So 80.20 divided by $941.80 gives you 8.5%. That's pretty good for 40 days, right? 8.5% return for 40 days. A lot of people don't get that in a whole year. Maybe you're one of those. I don't know. But we get it in the cash flow machine every 40 days in this example, right? Now, the stock has to stay over 1,025 because that's the strike price for you to get and fulfill the maximum. But if it goes down to 941.81, you still haven't lost any money if you wait the 40 days, right? So there's that bit of space in there that gives you that margin of safety that we like to have. Now, how does that work out on an annualized basis? Well, we have to make some assumptions that every time you do this, and it's 40 days, so we could do this 9 times during the year, right? We just turn it over 9 cycles. We get 8.5%. We do it 9 cycles, meaning every time it closes at or above the strike price, we make 76.5% in a year. Now, this is a conservative strategy. Covered calls are conservative. And these are the best covered call stocks that I'm giving you now. These are the best covered call stocks for 2022. And they're making a 76.5% at the money. At the money. Okay, let's keep going. You got that? You make 8.5% on the investment. You could be done after that if it stays at or above 10.25, or you can turn it over and try to keep redoing that. Make sense? All right. Apple. I showed you the chart on Apple. Lower left, upper right, even on the weekly, looks pretty good. Apple's what I call a chugger. It just kind of chungs along like like a train, right? Apple just, they just keep selling phones. They just keep selling subscriptions. And I don't see that ending anytime soon. So Apple does pretty well. It's a decent cash flow machine stock. And I'm saying it's one of the best covered call stocks for 2022 here. So let's take a look at the options chain. So now we're going to go a little bit closer in expiration. This one is going to expire in 12 days. It's where the stock is right now at 170. So we're going to do the exactly at the money 170s, and they're going to pay us $3.30 to do that, right? So remember those numbers, 12 days, $3.30 is what we get. That's how much we sell it for. And we're selling the strike price 170s. You got those numbers? All right, let's use those numbers to do our calculation again. So here's how the calculation works. You buy your base at 170 a share. You sell the 170s right at the money, and you get $3.30 back for doing it for 12 days. Okay. Here's the return on investment. First of all, we're going to start with the basis. It starts at 170 minus the 330. So our basis is 166.70. Now we take how much we made, $3.30 in this case. We got $3.30 divided by how much we actually put out. We put out at $166.70. It's just about a 2%. It's just under a 2%, like 1.97%, something like that. Round it up, make it easy. It's 2% for 12 days. Now that's a lot more than your bank is paying on a CD, isn't it? Well, depending on when you're watching this. All right. So your annualized return on investment is 2% times, we can do this, it's 12 days, so we can do this 30 times. We can keep doing this. As long as the stock stays at or above the strike, which it's right there now, so pretty good chance that it does, we're going to get 60% on Apple. Just a fairly conservative, nice little chugger. Pretty good, right? So there's a stock called Tesla that's a little more volatile, Apple, which is a chugger. And now I'm going to show you the third stock, which is from my list of best covered call stocks for 2022. You ready? All right, this one is called Nvidia. Now, this one is not ideal right now, okay? I'm going to be the first to admit that this stock is not healthy right now. I think by the end of the year it will be, and it's a good covered call stock, but right now it's not the best time to get into it. I will admit that. But nonetheless, I want to expose you to it because I'm not Nostradamus. I don't know when they're going to go up and when they're going to go down. I just try to get the probabilities on my side. And so I get those probabilities by selling calls, getting money from the covered call so that I can lower my price. Let me show you how I do this on Nvidia. So you can see that if you have the right price, right, the right spot on the chart, there's a higher probability. In this case, it looks like it's a little bit of a short-term downtrend, but nonetheless, let's go into the analysis of it, okay? So here's your options chain, and we are looking at the stock right now is at 230. We're going to go in the money to be a little safer. We're going to go $10 in the money. So we're going to do the 220s, right? The 220s will pay us $27.20, and that's going to be 68 days. So we're giving ourselves some cushion, and we're going out not just 40 days or 12 days. We're going out a little bit longer, a couple months, 68 days. Remember those numbers, 27.20 and 220 is our strike price. Got it? All right. Now let's do the calculation. We buy our base for $230.50. We sell the 220s for $27.50. Now, I want to teach you something. You probably already know it if you know about covered calls, but there's an in the money amount called intrinsic value. Since the stock is trading higher than its strike price by $11.50, that's the intrinsic value of it. But there's also something called extrinsic value, which is time premium. And that's what we're after. We're after that $16 of time premium that we're going to get. When you add those two numbers together, you end up getting about $27.50. So now we've got our basis, $230.50 minus $27.50 that we collected, which reduces our cost, gives us some safety. And now it's down at 203. Pretty good on a stock that's trading at 230, right? We have a nice cushion that we built in. Here's how to calculate the return on investment. We got $16 worth of time premium, extrinsic value, and we divide that by our basis, and we end up making 7.9% as long as the stock stays at or above $220. And it closed at or above $220, actually, $230. So it's already in the money. If it just stays where it is, it doesn't go down too much, you'll still make 7.9%. Now, that's a 68-day period, and we can only turn that over 5 times in the year. But if we make 7.9% 5 times on a conservative basis where we went into the money, now remember, this isn't the ideal time to buy Nvidia, you still get 39.5%. Pretty darn good, right? That's a good covered call situation as well. It's just not as good as the other two, but then again, the stock is in a downtrend. You want to be a little bit safer. That's why we went in the money. All right, so let's summarize the best covered call stocks in 2022. First of all, we start with our system. Now, our system is simple, right? We select the right stock in the right market at the right spot on the chart, and we squeeze the juice, or we collect the rent. Now, none of those things in themselves are hard, but when you put it all together, there's a lot of rules, which takes the emotion out of your trading. So then what we talked about for the best covered call stocks for 2022, we chose Tesla. Now, Tesla's got a pretty bullish chart. You saw that. It's got growing earnings. So they're doing a lot of fundamental things, right? The company's just hitting it on all cylinders, no pun intended, okay? And Apple's got a really bullish chart, but this is a pretty conservative strategy, but it's doing really well, lower left to upper right. Nvidia has a nice long-term bullish chart, but it's got a weakness in its short-term chart. And so we want to stay deeper in the money on that to protect ourselves for the inevitability of the probability that the stock might go down. Cool? So there are 3 covered call stocks for 2022. I hope you like those. But if you stayed this far, I told you I'd give you a bonus. Now, this is a fun one. Okay. This is a stock called MicroStrategy. Now, if you know anything about Bitcoin, there's a guy named Michael Saylor who runs this company, MicroStrategy. They're a software company, and they've been around for a long time. And he decided that he's just going all in on Bitcoin. And now he's got about $6 billion worth of Bitcoin in the company's portfolio, in the treasury of the company. So this is essentially a chart on Bitcoin, right? And so if you believe in Bitcoin, and I'm a big believer in Bitcoin, I have a hedge fund around cryptocurrency and Bitcoin, then you believe that the stock is going to do well, right? But as you can see, it's not doing well lately, but you're speculating on Bitcoin with this. So this is a lot more fun, but it's a lot more volatile. This is not one of the stocks that I'm saying is the best covered call stock for 2022. This is just a bonus. And it's also a little instructive to give you a little contrast. Okay. So let's take a look at this one. Now, here's our options chain. We're going to go 12 days on this one because this thing is crazy. You don't want to be in it that long, but it's got to look at the spread between the bid and the ask. 2160 by 2680. That's a pretty big spread. So we're going to go in between that, probably get about $23. We're going to make an assumption. We'll be kind of in the lower half of that, maybe get about $23 when we sell it. And we're going to sell the 455s. The stock right now is at 450, 450. Okay. So we're going to sell the 455s at $23 and we're going to go out 12 days. Let's calculate this out. We buy our base for 450, 450. We sell the 455s right at the money here for $23. We put the $23 in our pocket. That's our cash flow. That's our covered call strategy. That's our passive income. However you want to look at it, that's our margin of safety because it brings our basis from 450, 450 down to 431.50 because we collected that $23. You with me? You should be getting this now, right? Then let's calculate our return on investment. We take the $23 of time premium that we make on this and we divide it by our 431.50 and we get 5.3%. Not bad for 12 days. But that's because this stock is volatile. It moves all over the place. So you get an annualized return on your investment of 5.3%. If you multiply it and do the same cycle and it stays at or above your strike by expiration every single time at 159%. 159%. Like, that's pretty good. Now, this stock is volatile. And I want to just tell you guys, this is not financial advice. I used to be a financial advisor. I don't do that anymore. I just give you my opinion of what I think is going on. I run hedge funds for people that can handle the volatility, that can withstand risk. This is what I'm investing. I've been investing from Tesla for 2.5 years, Apple for a long time, Nvidia for a long time. So, and MicroStrategy too. But I'm telling you, there's risk involved in this, even though covered calls are the most conservative strategy when it comes to stocks and option investing. And it's a great thing. That's why I've built my whole cash flow machine around it. If you want to have some more information about it, there's a link below that you can click on it. By the way, if you like any of this content, please like and subscribe to this on YouTube or Rumble. If you like, you want to hear more from what I have a podcast called The Wealth Architect Podcast, and you can find it on Apple or Spotify, or you can go to the wealtharchitectpodcast.com and you can subscribe there too if you want. You know, if you want to go further with me, we do have a mastermind group around the cash flow machine, but you just learned a bunch of stuff about it. It's kind of cool. To summarize, the best covered call stocks for 2022 are the following: Tesla, Apple, Nvidia, and I gave you a little bonus one that, you know, you're going to have to kind of ride the roller coaster on this one. It's MicroStrategy. So I want to just finish this up by saying this is not financial advice. It's just an opinion. You got to know what you're doing. Get a system around what you're doing. Don't just see somebody on the internet and start investing your money. Build a system with rules and emotional boundaries and all kinds of things in there to make sure you don't lose your money. You have to get a full system like the cash flow machine. If you don't like ours, then you can find somebody else's. And then hit the like and subscribe button on here. So that's my summary of the best covered call stocks for 22. I hope you enjoyed it. I hope I delivered a little bit of value, and I'll see you on the next one. Hey, it's Mark Yegge, and I want to tell you about our cash flow machine trading program that's designed to teach you how to make safe, reliable income. Now, we shoot for about 2 to 4% a month of income and growth in your portfolio. We have courses that teach you how to do this for yourself or inside a mastermind community. And the best part is that it takes just 20 minutes a week to implement. Now, while 2 to 4% a month doesn't sound like much, I show you exactly how we took my IRA account from $111,000 to over $500,000 in just 19 months without huge risk. Now, I'm not telling you this to brag, only so that you can do it too. If you want to get involved in this program, just click on the link below for the cash flow machine and you can start right away. By the way, if you want to learn more, if you want to join some of my ecosystems, we have books and courses and masterminds and mentorships and all kinds of really cool things to get the probabilities in your favor. You know, I help wealthy investors play offense and defense by creating safe, reliable income. But it all comes from a system, guys. It all comes from a system. And if you want to learn to do anything right, you've got to have a system. It can't just be, I watched a YouTube video and now I'm going to go throw my good hard-earned money. You need to learn a system. And I've been doing this for 44 years, and I think I got some really cool programs for you to learn. Anything worth doing is worth doing right. You might as well learn it right. You might as well put the time and effort into something that's going to make you money for the rest of your life. Go to one of my sites. The main one is called hackingmoney.com. You can click there. You can go to the products tab. You can see what we have to offer for you so you can take your trading to the next level. And maybe I'll even see you at one of my events. In any case, I hope you join one of my ecosystems, and I hope we see each other down the road.